Price action following a mild week of losses. Futures unchanged. They were positive on positive trade mood music. Then they were negative on some really dreadful economic data in the Eurozone. And now we are unchanged on the session. In the bond market, treasuries did have a bid. Yields are still lower. We're down 3 basis points to 1.689% on a 10-year maturity. Coming in 2 basis points on a 2-year note to 1.661%. In foreign exchange, just a snapshot of G10 for you. The dollar largely positive here, stronger against the euro, with euro dollar coming in 1/3 of 1%. Tom Keene, I don't know what we should talk about this morning. Do you start with Daniel Jones of the New York Giants, or do you start with that dreadful economic data?
I'm dazzled that you were talking New York Giants.
I've got no idea what I'm talking about.
I have no idea. We'll get to that in a bit right now. I would talk about our interview with Bill Dudley here in the 10 o'clock hour. It will be worldwide, and I'm going to be blunt, folks. Farrell's going to lead that interview, and I would say we don't even talk about the essays with Bloomberg Opinion, but we have to go right away to this uproar over the repurchase agreement. Willem Bouter with us in a bit, saying it's a kerfuffle. Well, I'm getting that line from a lot of people, but there's a lot of considered smart people that I respect that aren't lining up with, remain calm, everything's fine.
The former New York Fed President, Bill Dudley, does have a message for Wall Street. He delivered that message last week when he said, get a grip, the Fed can handle the repo market.
I think we can agree with that, but what are
Why were they so late?
Well, maybe I'm going to ask that question. You're not, because I'll do it politely where you'll just grill them to death. But the answer, John, very simply is not only why they were late and John Williams versus Bill Dudley and all that, but what are the ramifications of it, whether it's QE4 or it's not QE4? The fact is, these are original things for global Wall Street.
Yeah, and I think Mr. Dudley will probably say later that just an expansion of the balance sheet alone does not necessarily mean it's QE. That we've been here before. Pre-crisis, this was very normal. The other thing we've got to bring up with him as well, Tom, is the op-ed from a couple of weeks ago.
Yes.
The Fed should not encourage the president's trade war.
Well, and, the backdrop of this is the politics of the weekend. But nevertheless, this is going to be something. John and I, in an extensive interview with Dr. Dudley, he was in my book years ago, his work with Goldman Sachs, and really looking forward to clearing the air for Bill Dudley. You can send our questions in to us. We'd love to take a look at them. No guarantee on that.
10 a.m. Eastern on Bloomberg TV and on Bloomberg Radio.
Why don't you bring in our esteemed guest here on where we are and what we do with our money right now?
I'd love to. I want to start with the data in Germany. Sure. The manufacturing numbers, absolutely dreadful.
In South Korea.
PMI coming in at 41.4 for German manufacturing. South Korean exports offering a nice little snapshot of global trade. It's not pretty. Exports dropping 21.8%. On the phone, I'm pleased to say, Lizanne Saunders, Charles Schwab Chief Investment Strategist. The first question, Lizanne, whether the US can weather the global manufacturing storm that's been brewing now for the best part of 12 months.
Well, I would argue that, and good morning, gentlemen. I would argue that the manufacturing side of the U.S. economy has not weathered it. Even our PMI, although not quite as disastrous as what we're seeing in the Eurozone, is below 50 as well. And I think we are at best borderline recession on the manufacturing side. Now, for now, the dividing line between the manufacturing and the consumer services side of the economy is fairly firm. And I think the transmission mechanism to see whether it morphs into a bigger services side is through the employment channel. So far, so good, except if you look at manufacturing-oriented states, at things like initial unemployment claims, you have seen a pretty meaningful tick up. So that's what I keep an eye on, is the employment data.
Liz, the comfort play has been to own big U.S. and frankly 20 or 30, I'll let you decide, 40 companies that are big U.S. Is that comfort play over?
No, if you look at the factor reversals in the last 2 weeks, it's been pretty interesting. And I think that's been the better way to divine what's going on in the market, is less about sectors or even things like cap, but factors around momentum.
Momentum and value, yeah. We'll review that.
2 weeks ago, you saw the big shift. Toward slightly more cyclical, more of that value orientation, which tends to do well when growth is picking up. But last week you went right back to the prior trends.
What does that signal?
I think the prior trends was reflecting the right place to be, and I think reflecting where we are from an economic cycle perspective. So we have had a large cap overweight, small cap underweight within the U.S. equities. I think that's still the right play. I think you want to look for reasonable growth characteristics. You want to be somewhat mindful of value, but this notion of going pure value, that tends to happen when you're in a more growth abundant environment. That's when you want to focus a bit more on value. When growth is more starved, which it is in the United States and globally, that's when you want to look for companies that can have that growth and have that stability and quality in earnings.
So there's some of the traits to get exposure to or not to get exposure to. Lizanne, talk to me about the index level at the moment. Life above 3,000 points this year has proved to be quite difficult. What is it about that level?
I don't know if it's that level per se. I mean, sometimes round numbers can, throw a wrinkle into things. I just think that's if you look over the last 20 months or so and you look at where we peaked out in January of 2018, at least in the case of the S&P 500, we kind of keep coming back to these slightly higher highs in this trajectory that has been otherwise relatively flat. That has not been the case, though, for small caps. It hasn't been the case for things like value line arithmetic average, and it just shows that there's not this confirmation, and that I don't know whether it's a topping process, but that is often what topping processes look like, where you get this sort of narrowness that means an index like the S&P that is cap weighted can continue to grind higher, but you don't see that confirmation from other non-cap weighted indexes.
Liz, one final question. What do you see at Schwab and flows? One of your considerable charms is actually knowing what retail America's doing. What are we doing with our money?
Not a lot of movement in terms of what we have seen. The one interesting shift that we see, and this is more concentrated at the higher net worth end of the spectrum, this is not across the spectrum of our individual investor assets, is an increasing interest in alternative investments and the private market, whether it's venture, private equity, or even hedge funds, surprisingly, because hedge funds in the aggregate performance has not been stellar, such that would be the trigger. So I think that's an interesting shift. And I get a sense, and this is more anecdotal than anything else, it's just sort of a frustration with the volatility in the market and the lack of progress and maybe just some of the hype around things like private equity. So that's an interesting shift I've seen this year relative to last year.
Very valuable. Lizanne Saunders, thank you so much. She is with Charles Schwab as well. I thought what she said there about the factor issue, folks, factors are things in the market like large cap, small cap. No, more like momentum, value. But we really bounced back from that mini crisis, if you will, of 20 days ago, 10 days ago.
Which was driven primarily by what was happening in the bond market.
Yeah,
and last week,
I agree.
The treasuries came back. Yields lower every single day last week.
10-year yield, 1.69% in 3 beeps. So basically, it's 6 days in a row.
Well, the data's rubbish.
Yeah. Did you see Euro Swissy?
Yeah.
Swissy came in. You mentioned German economic data. I read carefully the 3 or 4 reports on South Korea dynamics, and it's complex, and it is idiosyncratic, except South Korea is too big to be idiosyncratic.
South Korea is really complex now because of the trade relationship with Japan.
Yeah.
But looking at the numbers are still terrible.
Stunning. I mean,
and looking at Germany, look, the number one fear for many people through the summer was just a basic question. Does the weakness in manufacturing bleed into services? We're slowly seeing signs of that in Germany now, and that's of a concern to a lot of people.
You know, Michael Barros brought the tears here this morning. Faro opened, the biggest moment of our show is the Faro opening at 7:00 Wall Street time, and he goes all New York Giants on us.
I'm shocked.
I thought Daniel Jones deserved a mention. We've got a lot of Giants fans listening to the program.
Listen to this. This is just amazing. This is the dysfunction of the show. I'm all my thought. Thank you, NBC Sports.
You talk about Man City, and I talk about something I don't know about.
I found a YouTube thing where Michael Barr, I could look at every goal scored over the weekend of Premier League football. Bill fell asleep.
I am shocked. I applaud you. Jonathan, I applaud you.
I'm trying, Michael. I really am trying. I'm not going to mention it again on this whole hour, though. I promise you that. I guarantee that Tom does, and I guarantee that Tom talks about a little bit of Premier League football after a big game over the weekend.
Yeah, it was. I mean, we got a lot going on. Man City, of course, doing well, and the Tots. Harry Kane laid down on the job with an incredible goal, but the Tots lost.
I love that you saw that goal.
I saw that goal. Just for you, I did it. Anyways, Bill Dudley, 10 a.m. this morning, John Farrow and Tom Keene. Looking forward to that conversation. Worldwide, this is Bloomberg.
And now for the news from New York City, here is Michael Barr.
Jonathan, Tom, thank you very much. President Trump is continuing to play defense on the Ukraine whistleblower story. Trump tweeted that the reports that he pressured the Ukrainian president to investigate former Vice President Biden, a, quote, Democrat crooked media con. Meanwhile, House Speaker Nancy Pelosi signaled her readiness to take stronger action against President Trump, warning of a grave new chapter. It comes as President Trump will meet with Ukraine's president at the UN General Assembly this week. Opening statements are set to begin in the murder trial of a white former police officer accused of shooting her black neighbor in his apartment. Amber Geiger will stand trial in Dallas today for the fatal shooting of 26-year-old Botham Jean last year. Game of Thrones won for Best Drama at the Emmys last night. Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Jonathan, Tom.
And Michael Barr, thanks so much. Kitchuk Sakchen, just publishing from Warsaw, he says there is no sign of a fiscal policy tack in Europe. Stay with us. Future is flat. This is Bloomberg.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then go to Babbel.com.